good day. Welcome to another episode of Analyst Hangout here at iBrandTV, where we talk about the stock markets and the economy in general. My name is Olayemi Akwande, and I have with me in the studio Ambrose Omodion. Ambrose is the MD. Are you CEO now, Ambrose?
Anyone.
Ambrose is the MD Invest Data Limited, and of course I have Olaoluwa Boboye from Cardinal Stone Partners Limited. Olaoluwa is fixed income analyst and macro, right?
Yeah.
Long.
Yes. Good one.
Macro fixed income analyst. Thank you for coming on board.
Welcome.
And of course, during the course of the show, I'm going to be having two more people. Once they come on board, I'll introduce them. But let us first start with the activities of the market for this week. What happened on the floor of the Nigerian Stock Exchange this week, Monday to Friday? Ambrose, can you do justice to that? Please?
Yeah, I would say the week was a missed one, but good that it closed positive for investor. At the initial time of the week or at the beginning, there was little panic waiting for MPC meeting, and that's come. When it came out, there was a kind of about 150 points in terms of increase in the PR and MPR. That was a shake that the market lost about 1.82. The next day, saw market also trying to rebound. But today, we have seen that for straight 3 days now, market has charted another cost for itself, looking up, which is good for the market. That means market is now ignoring the 13% PR MPR for now. But I believe that investors should not be carried away with this kind of gyration. Set your stop loss to know exactly when to take profit and when to enter. Let your investment go and trade your plan. Don't be carried away with the market. But also, if you look at the market, I will tell you just out of 6 stocks that control about 70% of the market is the one pushing the market up. I think market is also looking ahead to see the numbers that are coming for Q2 to really reposition their portfolio. But I said last time that this is the time to look at commodity-backed stocks or assets to look at, because once this commodity group to push their either cost or cost of to consumers and they continue to post their positive earnings, at the end of the day, they are likely also to post a good dividend, which also will feed on the price. The market is still very healthy. As market is trading above the T line, and also I'll tell you it's a good one.
One of these days, you're going to tell us what this T line is. The thing I noticed about the stock market is there's little that can actually happen that will make the market go continuously down. Maybe news coming into the market that will make the market go continuously down for 2-3 days, 1 week. Since the last time that we had this Sanusi tsunami,
2009.
Yeah. So it goes down 2-3 days, we go back to the normal levels again. Anyway, thank you for that, Ambrose. So I have on Zoom Alhaji Kaofigaba from APT Securities and Funds Limited. Good evening, Alhaji. Hello? Hello, Alhaji, can you hear me? Okay. He's joining us soon. So that's that about the market. But of course, the almighty MPR that we've been expecting, monetary policy rates here and there, everybody's saying, all of you guys failed. I'm actually waiting for Alhaji to come on board. All of you failed the exam.
Yes, I'm online.
Oh,
I'm on board.
Alhaji, fantastic. I was actually talking, saying things behind you. Welcome on board.
Yeah, welcome.
Yeah, thanks for joining us on the show. So I said that last week when we talked about our expectation for the monetary policy rate, all of you guys actually failed because you agreed, you, Ambrose, and our third guest agreed that the rates will be held fixed. It won't be changed. But then we were all surprised, and I'm sure a lot of analysts are actually surprised that CBN will actually increase the rate. So I'm scoring all of you guys 0 over 10.
We are not surprised. We are not surprised when they decided to do the reverse. I think it's just a copycat. UK have increased their MPR. USA have increased their MPR. I think that is why they follow the suit. A system where for almost 2 years, without reviewing the MPR, so to assume that things remain unchanged is the most likely happening. But he chose the other way, which we are really surprised. Because I can tell you, for the last 4 years, there was never a time that MPR moved by 2,000 basis points. Now it will move by 1,500 basis points, unlike the 500 basis points which he normally does. So it's really a surprise every analyst, but it's better late than never.
All right. Thank you, Elijah, for the intro. But I just want to read something. Of course, don't worry, Ambrose. I know you have a lot to say regarding it. But I just want to read something here that one of the reasons given for the change or the increase, as it were, Now, according to the committee, high inflation has been due to an increase in money in circulation, more of which is anticipated with the volume of pre-election spending expected as the country heads for the polls. So I see a blue ocean, that's the whole economy as it were. Then, of course, the politicians will spend, is expected. And so CBN thought or decided that the spending that is attributed to politics is enough to drive inflation. And based on that, they increased the rate. So when this rate was increased, Elijah, what first came to your mind?
Look, let me tell you, they are just trying to cover up. This rate has been stagnated when the inflation was 11%.
Okay.
Today we are talking of almost 17%. So what were they doing? 11 to 12 to 13 to 14 to 15 to 16, now getting to 17. It's now they are using that as an excuse. So the inflation increased by 50%. When they decided to increase by their just 1,500 basis points, that is 1.5%. Not up to even 20% of what they exist. For me, they must have a reason for doing things, but it's not good enough.
Thank you.
Because for almost 2 years, this MPR was not changed while inflation was going up. Go and check the record. For the last 8 months, the inflation was going up. So why they didn't change it until now? They must have a reason. Thank you.
Thank you. Thank you, Elijah. Okay. So I've got Bovoye, fixed income analyst. So when this happened, when you saw this rate, first off, were you expecting it to change?
Okay, so at the start of the year, in our firm, in Cardinal Stone, we had projected that we might see a maximum of 100 basis point cuts, either at the mid-meeting of the year or in the second half of the year. So the cuts was not entirely, the hike rather, was not entirely surprising,
okay.
But the aggressiveness, the 150 basis point hike was what came at a surprise to us, right? And just to put a bit of perspective to this, the hike in rates that the CBN did, communicated few things. Number one, to curb elevated inflation. And inflation is in two sides in Nigeria. We have the demand-sided inflation and we have the supply-sided driven inflation, right? The CBN stated out clearly that the inflation in Nigeria is not entirely demand-sided. And monetary policy rates or monetary policy adjustments anywhere in the world can only curb demand-sided pressures, right? In which the CBN is trying to do, looking at the excess liquidity in the market in terms of money supply. When you look at money supply today, it's about 16% up year on year. Also, electionary spending is coming. There will be a lot of money out there, which we think that the monetary policy rates can do a bit of justice to curb, right? From the demand, from the supply side things, of things, we don't think that the monetary policy rate is significant enough to curb that. There are still structural issues, insecurity issues, which continue to pressure food prices and some other things. And then the second is, beyond the rate cuts trying to curb inflation, it's a signaling effect. The CBN stated it clearly, right, that if the CBN chooses to stand pat on interest rates, it will make the CBN look as if it's not sensitive to the global issue, which is inflation. So it was more of a signaling effect to the money, to the foreign investors, not the domestic investors, foreign investors, that the CBN is still on its toe in terms of curbing inflation, in terms of tackling inflation, and also while still having the mind of the entire economy, still having the economy in mind. So those were the things, the thoughts that flew through our mind when we saw the hike.
Thank you, Humbers. Waited. All right. What's your take?
Yeah, actually, I said it's in two perspectives. I explained the other side for the increment. Yes, like Elijah just said, globally we are seeing all the central banks in the world trying to fight inflation, trying to checkmate inflation with hacking rates. But also look at every climate has different environment. Not because the US did hike, then either England or the same thing. But look back to your economy. Yes, we say we are recovering. What is the state of recovery? Are we having strong recovery or a fragile one or a weak recovery? Because actually before now we know that it's cost push that we're having, not because of liquidity. I'll say it anywhere.
Yeah.
But now if you're increasing the cost of fund, automatically you're trying to kind of deflate the recovery we're seeing. Yes, if you look at our GDP for Q1 that just came, look at the Q1 2021. Yes, 0.14. Now we're having 13 point, 1 point, yeah, 1. But look at the previous one, 2021 fourth quarter, some of 3.98. That is a decline for first quarter. That is kind of contraction. For me, that is not enough. But you look at, yes, if you really want to make the manufacturing sector to really enjoy the rate. But one thing that they just said during the communication is that they want to still leave all those critical sectors that they intervene with one digit interest rate, which is good. But I'm telling you that if you are hacking it to attract foreign investors, at this time that it's pre-election year, no foreign investor will come to Nigeria now until after election. That means if you are sacrificing your economy to attract foreign investors to your economy, why economy is recovering? For me, you need to balance that, because a hike in interest, one, is to encourage savings. But how many people in Nigeria have that money to save? But why, if you save, you invest. I agree that. But let's look at what is really happening in the economy, reality now. So for me, stable development, because they want to one, checkmate inflation, and at the same time attract foreign investors. These are the major reasons why it was increased. Whether they're saying that money back policy is coming, fine, we agree. But one thing is that pre-election year, no serious foreign investor come and play in your economy until after election. Then the next 4 years, the stability, they will come. I was thinking that there will be adjustment in interest, but not in this meeting. Like second half of the, after the primaries that was just expected to happen at the end of this month. But for me, they decided to go this way. It's not totally a bad decision. But let's also change our investment strategy. That's what everybody that called me. Change your investment strategy to suit in this environment. So at the end of the day, we'll also be smiling to the bank.
You know why I'm smiling? You know, Ambrose has never, ever said any decision is bad. Ever. He will say it's a welcome development. So I'm sure that when I first saw this news, and what actually came to my mind beyond foreign investors, they don't stay here. I look at it from a point of common you and I as a citizen. Right. Now, you're given loans single digits, not to every sector, obviously.
Yeah.
Now, for those sectors that are not given, there's increase in costs of production, which they will pass on fully or partially
to the consumer. Yeah.
Now, we're already complaining that things are expensive. I mean, on the average, standard of living has fallen, cost of living has gone up. So this will also increase prices. So are we not creating another type of inflation that is cost or price driven, while we're trying to curb one that is politically driven, according to CBN? Alaji, you still there?
Yes, I'm there.
Okay, so I'm asking that should we be concerned when it comes to the impact of this increase in rate on consumer goods, for instance, and the cost being passed on to the final consumers?
Yes, we must be concerned, because we have term of unemployment. By the time the cost of borrowing will go up, definitely sure will go up, and therefore reduce borrowing by the manufacturing sector. And
hello, Laji.
Network.
Oh, okay. He's going to join us soon. Now, Olaolu is so relaxed. I don't know what is going on in the fixed income market. Maybe they're in the cocoon, it's not affecting them. So, Ambrose explained the other time that it might actually discourage foreign investors from bringing money maybe to the stock market. Do you think it's going to discourage foreign investors from bringing money into the fixed income market?
Not only the stock market, I mean. Not this
Alaji is back. Alaji.
Yes.
All right.
Yes.
Talk on.
What I'm saying, it has a side effect to our manufacturing side,
Okay.
because the cost of borrowing will rise up, and therefore they reduce expansion and productivities, and therefore it will affect our unemployment. At the same time, now, every money that you have borrowed before in the single digit, banks, they have a provision that as the MPR goes up, they will rise up and write you a letter that they have increased your loan. So the single digit will now become a double digit additional cost to manufacturers, and therefore it will stagnate the economy. We don't like it, but they choose to go by this way. And the truth of the matter that you will see a reduction in borrowing by most of the industries, and therefore it will affect unemployment.
Thank you very much, Alaji. Thank you. So I actually wanted Boboi to speak to you, because obviously with this increase in rate, we're expecting increase in treasury bills returns, right?
Yeah.
Okay, so
In bond.
in bond
Yeah.
also.
Yeah.
So do you think that is going to encourage foreign investors or even local institutional investors to bring in more money into the fixed income space?
Okay, so before I speak to that, I would like to take it from where Abu stopped, right?
Okay.
Trying to look at the narrative of the economy, the fragility of the economy and the economy not being strong enough. Yeah, I agree with Alaji, I agree with Ambrose that we might see borrowing costs going up for manufacturers, and then the question is, do they have the arsenal to take up these elevated costs, or they will pass it on to consumers, tight consumer wallet and all the likes of that. I totally agree with that. But like Ambrose said, the CBN is still keeping manufacturing rates, at 5% levels. That's a single digits. That's positive for the market in terms for the sector. Also, intervention in the agri space continues to increase. Just showing that the CBN still have the real economy in mind. And MPC hike will not, I think that we've moved beyond the fragility that we saw last year, or maybe perhaps at the start of the year. Ambrose is comparing quarter-on-quarter growth. I don't like to tell that narrative because we have seasonal sector within the Nigerian economy. Agric, cement, cumulatively, these two sectors account for almost 30% of the entire economy. Agric is about 25, cement about 5, 30%. So these seasonal factors will mean that economy will most likely contract when you compare it quarter on quarter, right, between Q4 and Q1. So it's better when you look at it on Q1 historically. We are back to 2016, 2017 levels. We are even higher than that. We're back to 2015 levels, which means that we've been able to surpass the 2 recession levels that we are, and we're back here. Now, coming down to your question in terms of the impact on the fixed income markets, yes, rates are already going up. The auction that was held on Wednesday, we saw yields jumping, stop rates jumping by almost 200 basis points, at the long end of the curve.
1.5.
So how much is TB rate now? Let's take 90 days, for instance.
So
for 360 days, about 6.49.
6.49, right? Secondary market auction, I think it was close to 7%, about 6.9.
That's still way below inflation.
Yes.
Why do even people bring money to fixed income, really?
So there are regulatory factors.
Okay.
So pension fund administrators, PFA, they must allocate X% amount of their total fund to the fixed income market, right? Because whether you like it or not, it's still risk-free. And then when you still look at the fact that the borrowing cost in Nigeria, as much as we agree that it's a bit elevated, is still not too elevated, right? It's still not too elevated.
Which planet are you coming from?
If you do
double digits. Wait, seriously? We are better than which country when it comes to borrowing rate?
So some countries are paying more, but we don't need to compare ourselves to other countries paying more. We should look at our peculiarities.
Our environment.
Our environment. So for the fixed income market, rates are going up. Our investors are still waiting to see when the market will bottom so that they can rightly position, like Ambrose said, but rates are going up. But I don't think it will take a very huge toll on the manufacturing sector. Alaji is too skeptical. Maybe he has a bit of exposure in the manufacturing sector.
Maybe you have a particular shock absorber that we are not privy to.
Actually, just to add to what he just said now, he said the PFAs, it's clear that they have a kind of regulated portion of their funds should be either in fixed income, exposure in equity market, and other stuff. But I believe that if you check one of the best or the 3 best PFA today in the market, these are what are playing even more on equity market because they understand the terrain. But I believe that even with the adjustment to 13%, which you know that naturally funds to start leaving equity market to the fixed income because of the risk-free environment. Yeah, but I believe that those that understand that are design investor, I call them that here the opportunity to make money in the market. Why did I say so? There are some stocks or some equities that that yes, they have kind of inelastic demand for their products. That even there's adjustment in their price, there's still demand for their product. That means they will still earn good money, and also price will still go because when we are seeing good earnings and we are paying good dividend, market will react to that positive number. Those are the areas people are looking at. That's why I said earlier in this program that let's target those companies that have what called commodity backward, stocks that at the end of the day you can position. But for those that don't want to take risk, fixed income is becoming attractive. I won't say that. So
fixed income is looking risky.
Wait, let me finish now. At the same time, if you are looking at the inflation and fixed income, I'm telling you that they are still in real red negative position. Yeah. Because if you look at the inflation, that by end of May, inflation is either hitting 17.8 or 18.
And you're having investment at 6%, 7%?
Even 12%, you are still already in
In
negative.
red.
What I believe that investors will look at those assets that will go with inflation, even give you above the return what's having inflation. And in Nigeria, I see inflation is 18%. It's more than 18%. That means you need to earn more than even 20% to say you are really making
Above
money.
par, yeah.
Right.
I even want to speak to the foreign investors that are bringing dollar rather, into the economy. I believe that the rate at which dollar is so volatile is even worse than inflation rate.
That's why, like what you just said, I wanted to even chop that one. Let me tell you, the way it is now, our FS market is not well regulated. It will attract foreign investors to come, because even when we are coming to God, it's a problem. And at the same time, I said earlier that being pre-election year, they won't come easily. And if you look at a report that was released yesterday for the month of April from foreign investors, that they are not much in our market again. That's why we're seeing little stability for the past 2 to 3 years in our market. As we speak now, they are about just 13.2% in terms of, less than that. That means the market is being dominated by an institutional investor and the retail investor, which is good for the market. That means we understand the terrain. That is why I said that the SEC and NSC operator like Alaji, like my brother here, that they should go out and educate Nigeria. Let's have more participants in the market. Even the fixed income market will also be beneficial, because when you understand how to trade, to balance your portfolio, you have equity, you have fixed income where you can reduce your risk. If you have a good robust portfolio, for me, it's about education. Let's depend less on foreign investor.
So the foreign investor story here, right? There's a story to that.
Okay, please tell us.
At the moment, foreign investors are exiting emerging markets and frontier markets everywhere in the world. They are running to safe havens. They're running back to the US. So when you hike your rate, it's not necessary to bring them back. So we have funds that are trapped in Nigeria.
I like that word, trap.
Yes, because they can't leave because of lack of dollar supply. When you increase your MPR, it increases the carry trade opportunities. Carry trade opportunity looks at interest rate differential between developed markets and Nigeria, and also look at exchange rates, spot rates, and expected rates in the future. That has improved carry trade slightly, which provides a bit of comfort for funds that are trapped into the economy. They can't leave, but they can roll over at higher rates. For new investors that could come in, they are not going to come in like Ambrose said, because this is pre-election, which is peculiar to our country, and some other countries like Angola, they have theirs in August. Also, the general global risks of settlement, they won't come. But then they begin to watch and observe what's going on. So when you look at Nigeria's carry trade now, with this hike, it could push it close to about 8%. When you compare that to Egypt of about 12%, Ghana used to be around 10%, but because of these fiscal challenges in the country, is out of the space. So investors continue to observe that, okay, once the market bottoms, then they can look at, okay, it's time to come back into the economy, right? So it's signal, it's communicative rather than to spur, an immediate action at the moment. And for the fixed income guys, right, if you do placements with banks, for instance, tier 2 banks, you might be getting close to 8% levels. Risk-free, your money is just sitting there and you're making 8%. So
I'll buy Okomo. I'll buy and I'll make 17% in 1 week. Anyway.
Okomo has rallied. Don't
let us go there.
I buy MTN.
Like seriously, I'll buy MTN. I'll buy Airtel. I'll buy Steplat. Like I can give you like.
Airtel has given us over 9% again. 2 days.
Ambrose, let's not feel like we want to eat him up. All right, but I'll buy a lot of things and I'll make 17% in 1 week. You can see us after the service.
But members,
yes, sir.
let us be aware
all right,
that the depths of our market cannot take the quantum of the money available for investment.
Okay.
And therefore, you need to look at for the money market and the bond market, which can take a lot of our debts. Trillions of naira can be played in the bond market and money market, but that cannot play in the equity market. And because of this, we have no choice.
Alaji, I can barely hear you.
The network.
Network is terrible. Alaji, sir, network is not a friend right now, but we need to go on break, and when we come back, you can finish your thoughts on that, and then we can review some Q1 results, that's Q1 result of some companies in the food and beverage space. We'll be right back after the break. Stay with us.